Welcome traders to another Tickmill trading update with me, Patrick Munley. Want to update the SP500 views in the Emini futures contracts and put together a trade plan for the week ahead and look at some high probability action areas and price targets that we can have in mind as we head into the trading week. So. Looking first and foremost, as always, off the charts and talking about market dynamics, market narrative, and some of the market internals. Last week, the S&P ended down 1.6% in the first week of November. Market narrative really was around valuation concerns on firms that leveraged the AI space, which pushed the information tech sector down 4.2% on the week. Consumer discretionary and communication services also had significant declines last week. The S&P 500 spent a little bit of time under the 50-day moving average, first time since April, but the rally on Friday got a close and a significant tail in terms of the daily price candle, which we shall discuss in more detail shortly. In terms of where we are with respect to the calendar this week, we are looking at a quiet day today. No earnings or data of note. Tomorrow is Veterans Day in the US, which sees the US bond market close. We should get ADP employment update tomorrow. They're putting those out weekly at the moment to, I think, to help bridge the gap in terms of the federal data. We also get a 10-year and a 30-year auctions on Wednesday and Thursday. I want to pay attention to the uptake on those. We should be getting initial jobless claims, CPI, PPI, to the back end of the week and retail sales. But unless this government shutdown is resolved, it's unlikely we're going to get that data. However, we have had some positive mood music over the weekend with respect to the potential for a vote and getting the US government reopened, which obviously then will have implications for data releases. So we keep an eye on the wires over the next 24 hours or so to see if we get some additional pop to the upside. Notably, we have gapped higher since the Asian Open last night. Again, we'll talk a little bit more about that shortly. In terms of talking about market breadth and where we stand, there has been a slight improvement. The number of stocks trading over their 20-day moving average has risen to 44% from 39% last week. Number of stocks trading their 50-day is 44 versus 40 the week prior. And stocks over the 200-day is now set at 54%, equal to the prior week. So, in terms of where we sit from a breadth perspective, there has been a modest improvement there, principally driven by the recovery that we saw on Friday. In terms of the gamma profile at the moment, still slightly short, but some decent hedging is likely now in place. So, if we don't see any follow through here in the early part of the week, that would build some confidence that a higher low in terms of the daily time frame is now in place. So that the gamma profile is supported now with dealers likely decently hedged as we head into this week. So in terms of where we are with respect to the market structure, the daily volume weighted average price is now bullish and sits at 67.79. So if we can close above there today, that will be a bullish confirmation and would technically additionally add confirmation to the reversal candle that we saw on Friday. The weekly volume weighted average price remains bullish above 67.44. In terms of the daily structure, that was one time framing lower, but a close today above 67.55 will negate that and bring us back into balance on the daily structure. The weekly structure is in balance at the moment, 69.52 to the upside. and 66.55 to the downside. Monthly structure remains constructive, one time frame higher versus 65.91. So let's take a closer look at the price action. So the weekly, as noted, we tested up into the two standard deviation volume weighted average price volatility bands, and that's where we got our rejection from. But we are now trading above the 5 period and well above the 20 period. So the weekly structure remains bullish. And like I say, if we hold Friday's low, that we could start to think that we do have a higher low in place on the daily time frame, which would then technically, on a close back through the 68.90s, would target a retest of the all-time highs and on to the 127 extension of our current corrective sequence, which would set sail for a test of just above the 7,000 level heading into the back end of the year. Note that we also have the yearly R2 at 70.47 and the 161 extension of the Liberation Day decline also sitting up just shy of that 7,000 levels. So it's really going to be pivotal to see how price action develops here in and around the early part of this week as to whether or not we're going to confirm the reversal on Friday or take another look lower. So let's take a look at the intraday time frame and the setup for near-term trading opportunities. You can see my current positions and stops in place on those. And what I'm looking for as we start the week here is we're testing a pivotal area. This is the bull bear zone for me on the week. This 68.20 to 68.30 level coincides with the anchored volume weighted average price from the all-time high. So we're testing there as we come into the week. We are supported above the value area high since the open last night, which sits at 68.11, and we have the volume point of control at 6,800. So really, I would suggest that bulls have the ball as long as we hold this area. So if we do, what I'd be looking for would actually be a break of the weekly bull bear zone to the upside. So I'd anticipate we could get a test up into the 68.40s. Any pullbacks then that hold this 68.20, 68.30 from above would then act as a support zone to get us up to test the 68.59 and then on to get a test of our weekly projected range resistance, which comes in at the 68.70s, and just above there we have the weekly R1 at 68.90, and we have this high volume node on the profile. We also have the volume point of control since the all-time highs and our lows printed last week at 68.70. So those will be the upside targets if we do break the weekly bull bear zone and hold on a retest from above. The alternative scenario is that we hold the weekly bull bear zone as resistance. Then I'd be looking for a gap fill, so a move back down to test into the 67.50s. Now then we'll see if buyers step back in from that area to look to build a base there to again test the the weekly bull bear zone from below, and then if we can get through there, then we have the same upside objectives in play. The bear case would be that we don't find support into the gap fill and we trade lower. The first downside objective will be a move into test the volume point of control here at 67.10. And if we don't find support there, then we will be targeting a retest of last week's lows en route to the downside predicted range support area, which comes in at 66.30s, where we could again see buyers step in. We also have the anchored volume weighted average price coming in there as well as the weekly S1. So we can anticipate an undercut of last week's lows and potentially a reversal from there to get to move back in to take a look at that volume point of control at the 67 handle. But again, sellers step in, then the next downside objective will be a move into 65.90s just below us there. So those are the scenarios that I'm tracking as we head into the week. For now, looking relatively constructive. Like I say, if we hold the 6800 to 6810 area, then I think we can take out the bull bear zone from above and look to build for a test into the weekly projected range resistance. As always, daily updates through the Tickmill blog. You can follow along with the daily analysis that supports this weekly video. As always, traders, plan the trade, trade the plan, and most importantly, manage your risk. Until next time, thanks very much.